Everyone. This is Brad Matheny. Today is the 5th of August. I had to check the date real quick. I know it's been a while since I've talked to you guys, and I received a message from Christian today asking where I've been. And just to let you know, I'm doing well, keeping busy, working on projects, got some new strategies I'm working on, and some new trading view code that I've been working on. Of course, can't show that to you yet. But the whole idea here is I'm still here. I'm still doing my work, and thought I'd give you guys a quick little update. We're moving through this big cycle phase here to the upside, seeing a very large kind of an exhaustion pattern right here. We've got a lot of upward volume taking place here, moderate upward trending with a big red volume bar last week indicating very strong selling. My proprietary indicators are saying that we have reached kind of a double topping pattern right here. So my proprietary system is showing that this is a double top right across here with rejection. And again, this is my proprietary custom index for the U.S. stock market. I've shown it to you before. But if this is correct, and this is showing that this is basically a horizontal top, you guys can't see it, but basically right here, if you imagine this coming up to here and rejecting, that's what we're looking at in the market. And if this is correct, and we have this double topping formation right here with my custom index with rejection and a big breakdown in downward trending, then we're looking at the excess phase peak pattern. Whoops, let me do here. We're looking at the excess phase peak pattern that I had talked to you about in this manner as staying very valid. And so what we're looking at again, ladies and gentlemen, is, a rejection here and a potential double topping formation, which I know many of you won't understand the double topping because you're just not getting the data. But my proprietary work shows this is a double top with clear rejection right here, leading to a potential downturn in the market. Now, if we're looking at this from a standpoint of where this downturn is going to take us, we then use the Fibonacci system, Fibonacci retracement, and we watch these levels, these what are called the Fib defense levels. And you'll notice that we have this huge gap right here between the 382 level down here to the 618 level. And that's the area that I think is where we could see in a very aggressive downward move. So as we move down into this area, this 600 area, we could see some stalling. Down into the 382, we could see an aggressive move with a stall, and then we could come down literally and just collapse into this area. So let me try to draw that again. Coming down into here, down here, bounce, and then collapse. And if that is the case, then we're looking at a pretty big breakdown. I'm not saying this is the case. I'm saying that my analysis says that we're getting a rejection at a double top up here, and that I believe that this range coming down provides us a very clear support level above the 600 level right here. And then below that, I see a wide open range to get us down here. So ultimately, I see a wide open range below this support level that has almost no support whatsoever below this level. Once we get below this 580 level, it's almost like a cascade or waterfall event, potentially down here to the 510, 515 area. So it's going to be very interesting to see how this plays out. If this plays out with higher volume, like I said, I'm watching right now for higher selling volume. So come over here, try to show you. I'm watching for higher selling volume. If we start to get larger amounts of selling volume over here, then we're going to look at a cascading downward type of a trend. Even in moderate amounts, if it was to go up, pause, up, pause, up, if these were in waves of downward trending, we could be looking at a pretty solid downturn here. So pay attention to the fact that, this large selling event here, after a big rally phase, is a big indicator that we moved into very deep selling right up here. Very strong, heavy selling. We could be looking at a continued downward trend up here. Okay, gold and silver. Gold and silver, we're on a tear. I don't know if you guys obviously have not been following my research because I haven't been out giving it to you, but we're looking at a big breakout phase. Looking at gold trying to make a move up to 41, 4,200, and silver trying to get back up to $40, $41, or at least up to $40, $41. I still look at metals as a big solid rally phase. I know a lot of people don't like metals right now, but I see them as unbeatable to the upside. Just thought I'd let you know. It's if you want more intraday analysis, you got to find somebody who can provide it for you on a regular basis. And my opinion is metals are a screaming buy. And then lastly, we'll come over here and we'll go to Bitcoin. Generally, Bitcoin's been moving into a downward trend. This is weekly. You can see I got a lot of chart data on the chart. We'll get rid of that. In honesty, this is very similar to what's going on in the S&P. So we've got this excess phase peak pattern setting up. And, we had that double topping formation kind of right across here. Then we moved up into this island formation up here. And now we started to break back down. In my opinion, I think this entire move here was an exhaustion speculative bubble. And what I think is going to happen next is that we're going to move into this downtrend here, trying to potentially come down into this consolidation range, and then eventually maybe try to break down into an ultimate low. Now, the ultimate low possibly down here around 68.55 to 68,000, somewhere down in this area, coincides with this range right here. But again, if my analysis is correct and that kind of double topping formation set up in the S&P, and we have a similar type of a setup here, possibly across this area, getting into rejection, and you can see this expansive type of volume right over here. We're getting that expansive volume in this sideways downward channel. And that means that we're kind of moving into this kind of a structure to the downside. I believe that could be a very solid indicator that price has reached its peak up here in this island, and we're going to start to potentially move down into this rolling downward channel. So I'm fairly bearish on Bitcoin. I'm fairly cautious on the market right now. I have actively hedged all of my long positions. I'm executing a new strategy in my trades. It seems to produce very, very well. It's a simple little strategy. But anyway, long and short of it, it pulled almost 85% out last week. Currently, it's sitting at about 15%. And I just pushed up some new trades today. We'll see how those play out by the end of the week. So, this is a very simple, easy strategy. And I pulled, it's pulling nicely. Anytime you can do 85% in a week on no-brainer trades, that's doubling your money almost in a week with no-brainer trades. Literally just a couple of trades, 3 trades set up on last Tuesday, doubled my money by Friday. I'm hoping to continue to do that, moderately 30-50% every couple weeks on money I'm trading. And that'll get me, like I've always told you, if you can do 25, 35, 45% every 20, 30 days and with a simple strategy, you're rich. Literally, you're turn $1,000 into, a couple million in 2 years. Easy. So what else can we look at? Well, I don't know. Let's go take a look at crude oil, I guess, real quick. Big rotation here, collapsing. I heard something about Trump tariffs today for Russian oil. Oil is really, this is weekly, oil is really having a tough time getting out of this channel. And you can see coming right across these highs. And actually, you can see here with these lows, same type of a channel. Now, do I think that oil is going to come down here into this 54, 55 area? Yeah, it could. It's been down here before. So you can see these lows down here again. So is there anything stopping oil from collapsing down in this area? Not really. If the economy contracts and demand for oil is weaker, this nothing is stopping it from moving lower. We've got to kind of watch and see what happens with the economy. Now, transportation index, we've had the big rally. Here's the election. Here's the big bump. Huge sell-off. Moving into this contraction phase. And what do you know, guys? This is weekly. This is a massive type of a flagging formation setting up really right across here, at least right now, and right across here. And you can see the upward channel that we had back here. We broke through it to the downside. And here's our big flag. And honestly, if we were to look at this with the tightness of the flag, come up here, let's count A, B, C, D. Ooh, we're very close to a big move here. A, B, C, D. A, B, C, D. Trying to count this move here, and it's very interesting and very difficult, as per se, in this range. Now, we are currently at right at the 50% marker. Right at the 50% marker. Boy, if I were to look at this, my initial impression would be this high would not be the high marker to start counting with. You would count basically here, A, B, C, D, looking for a breakdown E. But that would be my initial request, because this is the high of the upward move. This is the big breakdown through COVID. This is the recovery right at the 50% level. And this is the likely breakdown. Now, you could turn around and say, Brad, we have this large excess phase peak pattern setting up, coming all the way across here, down to here, moving across here with a huge excess phase peak pattern. And that would still indicate that we have a strong potential for a breakdown to try to retest these lows, maybe break down into consolidation down here. If that's the case, then we're looking at a big economic breakdown taking place in the absolute near future. And again, this is just my idea that we would break down. It could be much more aggressive into this area before we try to maybe bounce out of this, or maybe break down to an ultimate low and bounce out of it. But, this is a very clean excess phase peak pattern. This as well, although we've gotten up here to these highs, there's a very tiny one right up here. This is a very big one. And like I said, we are breaking down. You can see that we've gotten down to these lows. And these were back here, the 2022 lows, close to them. We could easily see the transport index attempt to retest these lower levels, which you can see is where I marked my consolidation. So be aware that we're looking at kind of a breakdown potentially in the markets off of this move to the upside. What else can we look at? Everything else is going to show pretty much higher. Let's take a look at platinum. Big move up to 1400 on expansion. This is weekly. Bit of contraction as we've seen platinum roll back down. Platinum will, just like metals, continue to push higher once we get into this next big expansion phase. So be aware of that. Copper, high grade copper. Everybody's talking about copper because of the big collapse. Do I think this is the end of the move in copper? No. We could be looking at a pretty solid low here off of these bases bottom levels here. But long term, copper can really move down into this area here before it actually finds support. So be aware that, you could see still more downward movement to about $4. And then, as I talked to someone the other day, we're getting into a very big seasonal pattern for natural gas. So natural gas is one of those interesting commodities that tends to be seasonal around July. Now, let me explain this to you. Around July, August, September, we start to move into a bottom that tends to peak out here in January, February, March. So here, July, August, September, we peak out January, February, March. July, August, September, we come into these lows. And we typically peak out January, February, March. Now, there can be some highs, obviously. July lows, peak out here or peak out over here. So you can see how this tends to work. July lows, peak out over here. So when you look at UNG, which is United States Natural Gas Fund, you typically get the same types of setups. You get these July lows moving into the January, December, January, February, March highs. July lows, somewhere moving maybe into the highs. July lows, moving somewhat into a high. July low, moving up into a high. And you got to be cautious to be able to catch these things, but it's been pretty common. July lows, moving up into a high, pull back up into a high. The real big move happened back over here, if you remember. This was a fantastic year for July. This was when natural gas, when everything froze. Huge move from 90 to 140. Then we had our July lows up into our November highs. Then we come down from our July lows, moving up here into September, October highs. And again, these are decent moves, guys. This is a 60% move. This is a 20% move. This is a 50% move. This is a 90, almost 100% move. This is a 64% move. This is a 60% move. This is pretty flat. And you get the idea. So I think we're looking at kind of a fairly strong little rally here. Okay, I'm going to leave you guys with that. Go back to the S&P. My wife is looking at me. It's time to get busy and help her out. I will talk to you in a couple of days, guys. Go get some.